Morning, guys. 3-1 declining to advancing stocks. A big volume right at the open because we had the quadruple witching. This is the quarterly expiration of stock and index options as well as futures. This is not the huge event it used to be because the options market has dramatically changed. There are now weekly options in stocks. There are monthly options. So the market is, in a sense, a lot more efficient and it's smoother, but it's a little less volatile on these kinds of days. And maybe that's a good thing for the markets. Take a look at the sectors, and Jim's right. It's consumer staples. In fact, more defensive tone overall for the market. REITs up slightly, telecom up after a down week overall. Industrials have drifted lower throughout the week. Banks just have not done anything for a long time. That's the major sort of loss of leadership group that we've got. It's a bit of a pause this week. We're basically flat on the S&P. It's mostly sideways, but I would say the leadership is still intact. Take a look. Consumer discretionary first was dragged upward by the retailers. They're down a little bit this week, and now we've had the media stocks doing really well, and that's in the consumer discretionary group. Home builders were weaker in this sector. Consumer staples have come up a little bit. Technology is maintaining its leadership position there. Healthcare has done really well. That was helped by some of the merger stuff this week. Overall, and banks is, of course, the big group that has basically given up its leadership position, down 3.5%, and that's just in 1 week. And by the way, all the European banks, they're also to the downside as well. What's mattering to the market right now? On the China trade issues, the tensions are still, I think, small, but the reason I think we're down today is there's concern that it could escalate. There are various reports out there that there are other tariffs being prepared, and now you've got a tit-for-tat thing, and now you've got an escalation, and I think that is the concern for the market right now. The Fed is modestly hawkish, but I don't think the market views it as a dramatic threat yet. Economy is improving, and the pace of change, the market's saying they can handle it right now. The earnings is the key story for the market. We are not peaking on big caps, small caps, mid caps. I put up everything. Third and fourth quarter is signs where the market may be peaking in terms of the growth, but even 2019 is going to see 11 or 12% growth in earnings right now. Retail sales were great. The metrics and the guidance were strong. That's one of the reasons the retailers were so strong. We also, of course, remember, had the whole merger thing this week that boosted healthcare as well as media stocks. Elsewhere, we've got a couple of IPOs today. Avalara, which is a sales tax and compliance provider, they priced well above their range, waiting for that to open. 7.5 million shares at 24. Price talk 21 to 23. We've got another Chinese IPO. Generally, the education IPOs have not done that great this year, but we've got Pushin, which does K-12 after-school tutoring services, and that price at the low end of the range, 7.2 million shares at 17. Price talk 17 to 22. A lot of people have wanted access to the Chinese consumer, but the education stocks don't seem to be particularly exciting anybody here in the United States. We essentially opened down 160 points, Carl. That's right where we are right now. Back to you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.